Hi there, and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Well, the numbers sure look good when our latest GDP figures were released, with 4 successive quarters of growth and a 1.7% increase in the primary industries. But it wasn't so good when May Wang creditors learned they'd be getting a paltry 2 cents on the dollar for her failed property development company. And in international news, with rising deficit worries, the G20 summit in Toronto, my hometown, saw governments move towards tight financial reforms and budget austerity. But first up, I talked to rural economist James Shortall from ASB. James, thanks for being with us. Now, at the end of last week, our currency looked absolutely sensational, especially after the U.S. Fed meet. What's happened to it since?
Last week we were sort of getting up towards the well over 71 cents against the US and looking fairly stable at that point, but over the past 24 hours we've actually fallen about 2%. And once again we're under 70 cents and probably closer to 69 cents on Wednesday morning. So it's been a tough 24 hours for equity markets and a few things in the mix. US consumer confidence as well down, and that hasn't been good for global markets.
And it may not get better. I hear that on Saturday the latest unemployment figures are coming out. They're being tipped to rise up to 9.8%. That can't be good for the Americans.
Well, yeah, when you've got unemployment potentially rising and then consumers a little bit cautious about spending money and getting their checkbooks out, then that's not good for an economy that is based on a lot of consumption.
How are we doing with our major trading partners? How's the euro and the pound performing?
We have actually, over the past 24 hours, fallen back against both the euro and against the pound. But we still, relatively speaking, we're very, very strong against both of those currencies. And, when we look at over the next 2 to 3 years, then we aren't really expecting to see a big fall for the New Zealand dollars against both the pound and the euro. So, that's not going to be great news for some of our exporters, particularly perhaps the lamb industry, which, we export a lot of lamb into the UK.
Okay, let's talk quickly about the equity markets. What's happening there?
Overnight, equities have fallen, so the European and US markets have fallen sort of 2 to 3% over the past 24 hours, and the Shanghai Composite Index was down 4%. So there was a bit of a few reports coming out of a few agencies that's suggesting that China might have to increase their interest rates pretty soon, and that to control inflation, and of course they may be impacted by exports from the weakness in Europe. But my feeling is that we might see a slowdown in the rate of growth from China, but they're still going to grow very, very strongly. Okay,
let's talk a little closer to home. The GDP figures are out. 4 quarters of successive growth. Is it all good news?
Well, to be honest, it's still relatively soft growth at the moment. It's good news that across a bunch of sectors, then we're looking to a little bit more steady. So the recovery was a bit more broad-based this quarter as opposed to previous quarters where it was pretty patchy. Agriculture was doing pretty well the past few quarters, and now it looks like there's a few more sectors, non-food manufacturing. Some of the other sectors are looking pretty good, and that's good news in general. But households are still feeling the pinch, and the housing market's going to be a drag on the New Zealand economy for a while yet.
In terms of the primary industries, up 1.7%. Who were the big earners?
Well, we know that dairy exports have been strong over the past sort of 12 months, and dairy prices have been very strong. So there's no question that dairy has been boosting the primary sector. Forestry through 2010 has also been very, very strong. So that's been a good news story. So there's been some pockets of data there that have been really good for the primary sector, and that has contributed to New Zealand for sure.
Let's talk about dairy. Is the great price ride continued guaranteed, do you think?
Well, my opinion is that dairy prices over the past sort of 4 to 6 weeks have been pretty stable, and in context, and that's a great thing because we've seen so much turmoil for global markets through since the beginning of May because of what's been happening in Europe, and the fact that dairy prices have stayed fairly stable despite other commodities falling, then that's good news, and the longer that continues, the better it is for the industry.
Tell me, in terms of the dairy prices, how high do you think they can get?
Well, they're not as high as what they were in 2008 when they got to all-time highs. So, when you look at sort of whole milk powder, which is the main product that we do export, then that's sort of sitting in the late $3,000 per tonne. It did get up to sort of 4,500, 5,000 per tonne, 20% higher than what it is right now. I personally don't think it's quite going to get there this time around. We're in a commodity boom at that point, and right now there's too much going on in the global economy to sort of say that prices are going to continue rising, but it's just they might hold steady at these levels or a little bit lower.
Okay, so what are you predicting for the payout? What's it going to be?
Yeah, well, we've been a little bit cautious about expecting too much too soon for the for Fonterra's payout, just given what's going on in the global economy at the moment. But to be honest, when with markets holding steady, seeing good demand out of our major markets, so over 70% of our exports are going to developing economies, and they've come out of this recession. Well, they didn't even get into recession, but they've come out of this crisis looking very strong and much faster than other places. So, we're sort of predicting that the longer prices are able to hold at these levels, the better it looks for 2011.
Okay, let's go to the beef sector. What's happening there?
Yeah, beef...
Big changes in the US?
Yeah, the US, if you'd asked me two months ago what was happening with beef, then it would have been, really, really positive about the outlook over the short term for beef. But over the past 2 months, then beef prices have fallen a lot, and it's quite a bit of it to do about chicken, actually. So when we look at the beef market, then chicken and pork have a big impact. And of course, the US chicken has been banned from Russia, which is their major chicken market, and there's been an excess of supply in the US. That's put pressure on other meat products and put pressure on beef prices. So things have changed quite fast for beef, and I'm just a little bit more cautious and a bit more concerned about the next few months for US beef prices and in turn prices for us here in New Zealand. Okay,
very quickly, in less than 30 seconds, what's up with venison?
Well, venison, sort of holding at these current levels. I mean, the risk is what happens in Europe, particularly given that Germany's our biggest market. But the German economy is going pretty well. It's all about supply. It's a little bit like lamb. So picking that things are going to continue to be reasonable for the venison sector.
Thank you very much, James. That was James Shortall, ASB Rural Economist. Next up, we're going to be talking to Bernard Hickey from interest.co.nz. He's going to join our panel to discuss the business headlines making the rounds. So please stay with us. Welcome back. Bernard Hickey joins us now. And tell me, you've been listening from the sidelines. What are you thinking about the GDP results?
Well, we're seeing a restructuring, in a way, of the New Zealand economy, more towards the export sector from the consumption sector. People in the housing market and retailing are struggling because people are repaying debt. And the real drivers for growth are the rural sector and the rest of the exporting areas of the economy, which is great. But it is going to see a transition from what was an economy which was essentially a housing market with bits tacked on to one where exporters are the drivers. And that's a great thing.
Now, the government here seems to be working hard to put in stimulus measures. They're looking for sustainable growth. How are they doing?
Well, the government is still pumping cash in at the rate of $250 million a week in borrowed money. Now, that's going to dry up over the next couple of years, but still the government is stimulating the economy. The danger is that it continues to stimulate too much and that the Reserve Bank has to jump in on the other side to put up interest rates too much. We've seen in the last couple of weeks the Reserve Bank's put up the official cash rate, and again this week it has come out and reaffirmed it needs to keep withdrawing stimulus from the economy. So farmers can expect interest rates to increase at the same time as the government is withdrawing its stimulus.
It was interesting to hear, too, Bernard, listening to President Barack Obama earlier in the week at the G20 summit. He's very nervous. He says it's too soon to get rid of stimulus.
Well, we're actually hearing predictions this week from some quite close to the Obama administration of a third depression. Paul Krugman has come out and said there is a real risk that the global economy goes into a very long recession or even worse, and that the governments globally need to keep stimulating. The trouble is, the Europeans don't want to stimulate. They want to cut their budget deficits because they've got financial markets crawling all over them saying you can't keep doing this. So there is a clash going on